Hi, this is Kyle Markham with International Futures Group, a division of EFG Group in Chicago. Want to just give you a little commentary on the grains for today, Wednesday, May the 27th. We'll start with corn. Corn's really just been a leak lower forever now. Today we did get awfully close to those October 2014 lows in the July corn. There's no power to it. It's just eroding away. So when we look at the fundamental picture, you do have some people trying to talk about the amount of water that we've seen, the lack of heat that we've gotten, and some guys that might have to replant, etc. Problem is, when you look at the weather and when you get other people talking to you saying that they're very impressed with how the crop's starting out, fact is there's just no catalyst to get this corn market to move higher. Let's also consider that the dollar in short order has gone from 94 to 97.5 very quickly. That's not going to help exports. And at this time, there's just nothing really out there to stimulate a reason for the corn market to get any kind of a bounce to the upside. Realize as well, though, we do have the funds really piling on top of this corn. Personally, I think the timing of it is a little concerning because, in my opinion, we've got a long, long ways until it's in the bin. That doesn't mean that, that the market's going to start rallying, but definitely there's a lot of things that can happen. And I think the other issue was, you saw that 74% good to excellent on corn. You see those numbers deteriorating, maybe there'll be something to talk about as far as any kind of a friendly stance in corn. At this moment, there's not. Moving on to wheat. Wheat's just been flying. You've seen the Kansas City-Chicago spread just moving ranges on a daily basis that we haven't seen in a long time. Front month wheat, July wheat, we're near 520 the other morning, or yesterday morning, excuse me. We trade 482 today. So you're seeing that volatility is consistent. There was a lot of concern initially because of the amount of rain that we saw in the plains over the weekend. Problem is, it's some of the areas, when you're seeing all the rain in Houston, there's not a whole lot of wheat in Houston. So that was overblown a little bit. You've also heard people saying these funds are going to get scared. They're going to cover their position. Well, it's starting to look like they're not getting scared. And you've got the dollar, you've got global wheat that we're still not competitive with. The end result is that they've taken wheat, using round numbers, let's say we're 50 cents off the recent high in wheat, and it's happened very quickly. Obviously that wheat corn spreads moved dramatically as well. So we're getting into a situation with wheat. You saw the ratings yesterday, considerably better than what the trade or the analysts were looking for. So we're getting into a scenario where eventually is it going to be a quantity issue or a quality issue? We don't know that yet. All we can do is just deal with what's right in front of us. But as we get more of those reports and as we continue to watch the weather, they're saying there's going to be quite a bit more rain in Kansas and Oklahoma. We'll see if that comes to fruition here in the coming days. Looking at the soybean market, that's kind of done the same thing. I mean, there's been a bit more power to it. We have been, seeing a little bit larger range, but the volatility's not there, and we continue to just go lower. I think the trap has really been what the July-November bean spread's been doing and the July-December meal spread. I mean, that July-Dece meal traded out to $11, which it appeared was just squeezing the people that try to be short the spread, and all the while meal is standing in. Front month meal or the July meals, unwilling to really crack that 300 level, but the beans are still just drifting lower. So we haven't really seen any kind of a bounce. I think for producers and speculators alike, the problem with the beans has become there hasn't been a bounce to sell. It's just one of those scenarios where the market continues to grind lower, and seasonally, it's not really all that surprising, and you're going to be looking, hey, somewhere late June, early July, can they slow it down? Remember, we do have what's happening in Argentina with another round of strikes. That could be why meal's acting how it is. And the only other thing that I can say is because of how consistent the downside's been in these beans, you've always got to be open to that sudden squeeze higher. Doesn't have to be fundamental. It could just be one of those scenarios where you get a little bit too heavy on one side and the market can bounce a little bit. But, the market's broken, 50 cents without really blinking. So the bounces are probably going to be shallow, and they're probably going to be sold very aggressively. So that's all we have for grains right now. If you have any questions or concerns, give us a call. Again, I'm Kyle Markham with International Futures Group, a division of EFG Group in Chicago.